Hello, everyone watching and listening to this week's episode of NRG Insights. We've mixed up a bit this year, so we've got a few people representing lenders this year. I think it'll be really useful. Obviously, the majority of people that listen are mortgage brokers, so it'd be great to get some kind of takes on the market from a few guys from the lending side. Let them have their say, because we slag them off enough. So, on that note, I'd like to welcome Brad Rhodes from Pepper Money. Thanks for coming on.
Morning, everyone. Thank you.
So talk to me about your financial services journey briefly. I know you've told me before the long-winded version. Give us the kind of journey up to where you are now. You're national key account manager, aren't you, Pepper? That's your title.
National key account manager. So I look after the distribution partners, the networks and clubs, basically.
Good stuff.
So yeah, I started after I left the military. So I was in the Royal Air Force. I went to see a mortgage broker and thought I could do that. I knew I was leaving, so I took my resettlement money and did my CMAP, did one of these fast track courses. So did that. Then
did you pass it first time?
We'll say yes, because everybody.
Good, yeah, because I passed mine first time.
I did fail the one about pensions and taxes. If I'm going to be totally honest with everyone,
The really important one for mortgage advice, yeah.
Correct.
Pensions
the one
and
that
taxes.
I really did not have a clue about. But it was difficult because I came from a military background. I'd never looked at buying a house before that, so I actually didn't know much about the home buying process. So
yeah,
it was good. I then joined a well-known estate agency where I was there for a couple of years.
Was that on the mortgage side?
Yeah. I went straight, did my CMAP, and obviously some of these estate agencies will take you on as trainees. So I joined a well-known estate agency brand. And
Are we allowed to say who it is or not? Go on, start
start
slagging them.
Countrywide.
Oh, okay. This is my bugbear of Countrywide, and they make fantastic mortgage brokers, and I would happily say that to those guys. Then they treat them awfully, but it's a really good fishing ground for someone like myself. But it's a great place to learn the trade, because they've got a great academy.
I had a great manager there. I had a great time there. I can't really say anything bad about them. You know what I mean? They were really good, and like you say, the training that they gave me, it was a limited panel, as most people know back then, but it set me up to know a bit more about mortgages. I then made a bit of a career change and decided to go into retail mortgages with Santander. So I was branch based for many years. Absolutely love that. Very different when you're just talking about Santander products. Again, absolutely loved my time there. I was there for a good 3 years, I'd say. I hope to have a look at my CV.
I've got your LinkedIn open somewhere.
Yeah. And then I made a decision I wanted to be a BDM. I'd spoke to a few people about it. Trying to find the right opportunity is difficult when BDMs. There's a lot of people wanting to be a BDM. It's a great job. So.
How long ago was that? Because obviously that's been as long as I can remember in recruitment. That it's been tough to go from broker to BDM or from banking retail to BDM purely because of that reason, right? Lots of people want to do it because you're all overpaid and it's a relatively easy job. It's that was a joke.
No, it is a great job. So I bet you're talking 15 years ago.
Oh, really? Gosh.
Maybe a bit less. The first opportunity that came up, ironically, was South Wales. So with me being up in Chesterfield, so I rented a room down there and went down to South Wales to be the BDM for Santander in South Wales.
Do you know what? I think that's really important as well, right? Because people will be like, I want to be a BDM, I don't want to do this anymore, but you've actually had to take the opportunity by leaving where you live, right? You can't, it's not always going to be on your doorstep, is it? And the nature of it is you're a travelling salesman. So I think that's really important, actually. If you really want to get into that job, then you can't just look at the one next door. So you've actually, and although you've excelled going through it, you've had to take that punt at the beginning, haven't you? And actually move away from where you live and move somewhere you don't know.
100%. I'm still grateful for getting that opportunity because it's not an easy job to get into. And if you think, as you know, with BDMs, they move patches, they move lenders quite often. So I would have been up against people who were already BDMs. So it was great that a couple of people took a punt on me. I'll mention them because it's always nice. Paul Adams and Jason House from Paul Adams, who I work with now, ironically, and Jason House from Santander.
Well, also, was Paul from? I was going to thought I recognised the name. Paul's from Pepper here. So was Paul with you at Santander?
Yes, he was the head of distribution, I think it was called at the time. Yes, he was.
Dragged you over.
Yeah, well, something like that. I begged him. I didn't. So then I got the South Wales job, and then I was waiting for a position closer to home to come up. The West Midlands patch came up, which the closest appointment was about an hour and 20 minutes from my house. So I moved into that one, and then when the East Midlands patch came up, which was my local patch, I then moved into that one, and then the last job as a BDM with Santander was Central London.
So you got close to your house and realised, nah, it's not for me. Went back out.
We'll skip past that bit.
Okay.
No. On a serious note, the Central London job was the big job, obviously.
Yeah, it opened up lots of avenues for you, doesn't it? The Central London one is the high net worth.
Unfortunately, it did, which is why I ended up moving on. But again, that was a fantastic opportunity. So I really appreciate everybody at Santander who put faith in me to go and do that job. I did that. Didn't do it too long, to be honest. I did it about 7-8 months before I got offered the role as corporate account manager at Platform, as they were now the cooperative bank.
Oh, nice.
Doing this job. So I was there 4.5 years, and then now you find me at Pepper Money.
Excellent. And so obviously this is the first one of the year. People aren't going to know that when they're listening because they're all pre-recorded. And the reason I wanted to get you on, because we have these discussions quite a lot. You're a very positive guy, right? We got on very well because of that. I think that we always talk about the positivity in the market, that kind of thing. And I think it's quite poignant to talk about it this time of year. So, I mean, let's talk about the trickier time. Let's go through kind of 2023. I mean, how was it for you guys, and how have you seen brokers kind of navigate that, if you like?
Ironically, since I joined Pepper Money, in 2022 this all started. We came out the back of COVID. The market was good. We then had two important points happen: the mini budget, which was really fantastic for mortgages, and obviously the war in Ukraine. Russia invading Ukraine had a big impact on obviously the cost of everything and just what was going off in all the markets. So that was the start of it, really. So then 2023, mortgage rates were absolutely rocketing, but in comparison to where they were, one of the things I always say, did we really, I'm talking about as a market, did we really tell customers that these rates are not the norm? When I talk to friends about the rates now, they saying, well, I'm currently on a rate of 1.5, it's just coming off and things like that. I said, do you think rates will come back to that? Because that's what I'm used to. That wasn't right. That wasn't normal.
It was a little blip in history, wasn't it? If we look at where rates are normally, money costs money. It's just, but then we've had to get used to it, and I do appreciate it happened so sharply. If you've only ever been in that world, right? If you've never been in that before, where this is an average mortgage rate. It's still quite hard to stomach it. It's quite hard to sell it. I do understand where people were struggling a bit, but it's not the end of the world, though, right? It wasn't.
There's bigger things to worry about. But like you say, it does impact. It impacted everything. Mortgage rates being so high, it impacts affordability. So then it's also impacted the purchase market, because people now are thinking, do I need to move? When rates were so low, even I was looking and thinking, shall I get a bigger house? I had a real good look around. Looked at the mortgage payments, thinking this is something I could do. I didn't, and I'm quite glad about it. But a lot of people don't do that now because the rates are that little bit higher. But
you've got to think a bit more. That's the point of it, isn't it? It's not as easy.
No, and then going back onto the positives, now at what's happening, we've got an absolute rate war going off in the market. Last year was last year. The market was down approximately 30% on the year before. It is what it is, it was tough last year. And for a lender like ourselves, we're reliant on the swap rates and where mortgage rates are at. It was a very tough year. There's not many lenders who had a great year last year.
No. Well, that's funny enough. Obviously, I'm recording a lot with lenders at the moment, and no one's bullshitting though, right? No one's going to turn around and say we had a great year, because we know the brokers didn't, and the products weren't going out. We know the market was lower. But there is some positive sides now, though, right? We're a big 4 days into the new year. We're starting to see some positive signs already.
It's amazing. Do you know something? I knew that the lenders would come out quite aggressively with pricing at the beginning of this year, but I did not expect it to be so quick. Because we're talking
massive.
Sorry, I had to just look at the date then. 5th of Jan. How many lenders have we seen reprice?
Yeah.
It must be 15 or 20.
But, it was loads yesterday. Loads yesterday, the day before. It's incredible.
And not just mainstream. You've got the smaller building sites, the specialists. Everybody's coming back to players, I'd like to say. So I'm really positive about this year. I think it's going to be a good year, and it's just going to be competitive. So it's getting like lenders looking at their criteria. How can we separate ourselves? Which is only going to be good for brokers and customers.
Yeah. And how do you see the brokers faring that survived last year? I mean, we talked about it before, right? What have we learned from last year? What do you think, and not just brokers, lenders as well, but business people, anyone? What do you think? What do you think are the main learnings that we've got that we can take out of 2023 and kind of bring into this year as a positive?
I think the big thing is keeping in touch with your customers. I think that really came home because rates had changed. We had a lot of worried customers. Rates have gone from, say, 1.5%, some people, up to 5 and 6%. Those customers are worried. So I think one of the big learnings that brokers should have is keep in touch with your customers more. Brokers have got to keep in touch with them. Give any reason you've got to talk to them. Make sure that they're okay. Have a review of the mortgage, because with that review you get your protection, your home insurances, everything. People are branching out into other areas, wills, etc. Opportunities there. It's just keeping in touch.
Do you know what? Opportunity is the ideal thing. Is the spot on word there, because you're right. If you're only speaking to someone once every 5 years or 2 years or 3 years when they're like, life changes, doesn't it? Things happen in your life, and you're unaware of it if you're just not speaking to your customers. I think last year that you saw that as well, because you saw why some people went by the wayside because they're very transactional and it's just the way they do business. And the people that have looked after their relationships, when it was relatively easy, it's made a massive difference. So you're right. I think if there's one thing we can learn, pick up the phone. We speak to everyone.
It's not difficult. Just simple, because your CRM systems these days will do it all for you. They'll send an email for you. They'll say, look, just to let you know, we're going to give you a call next week just to talk, make sure you're okay. Just that little 5-minute call. 'Cause the customer might not want to have too much of a conversation, but checking in. So when that deal's coming to an end, and the current lender sends them a letter saying, give us a call, they're going to say, right, I need to speak to Brad Rhodes Mortgage.
Yeah.
We need to speep to Brad.
But that's the same in any business, right? You just got to keep it in front of people. You got the touch points are so important, and I think I do get it, right? And I do think it's like a management potential issue that we probably haven't managed people to do it as well over the last few years because it's been easy money. So if you're fairly new to the industry, you've never really had to, this is going to sound condescending, I don't mean it to, but you've never really had to work particularly hard to make your money. Because the money was cheap, people would come to you, it's transactional, even if you weren't particularly good. But that's why I think the correction in the market is good. I think it's made everyone have to step up their game. Everyone that used to do it has to remember how they used to do it. Everyone that's never done it has to be trained better or managed better or just to learn to do it. So I think one of the positives from last year is we lost a bit of driftwood, if we're honest. And also, we're all a bit sharper now, right? Hopefully.
Yeah, there's a lot of learnings. Like you say, we look at PTs now, how big they've become. And then brokers are now looking at it and saying, just a minute, I'm doing a lot of PTs and I'm getting paid less.
Yeah.
So now that's really making brokers think about what to do moving forward. It's like when I'm talking to distribution partners and brokers these days, the terminology used to be my remortgage pipeline. I've got these remortgages coming up.
Yeah.
PTs. Now it's PTs.
Yeah.
And I've spotted that over the last
But I think with the PTs, they've kept the lights on. So I speak to brokers. I know brokers from the last 12, 15 years that wouldn't even touch their PTs. Like, it's just not worth their time. But those customers are now speaking to another broker because they did do it and they did earn next to nothing off it. But when they come to these troublesome times, they remember that guy that did it for them. So I do think the PT market, I understand you don't make enough money. I saw a very convincing argument from a banker the other day about because brokers were moaning, obviously the margins aren't as good. And they were saying, where does the margin come from then? Because our margins are the tightest they've ever been at the moment in banking. I've never felt sorry for a banker, actually. I think he's very good if he can convince me, the poor bugger's got no money. But do you know what I mean? Like, it's got to come from somewhere, and it's not fair on the customer at the moment. The banks are losing margin. It's not fair on the customer because they're paying higher. So I do get it. But we have to gear our businesses around that now, right? That you're going to lose a little bit at the moment, but it keeps the lights on for when it's not going to be forever. So I do think that's important to remember, that it's not transactional.
Totally agree. And now that the rates are coming down, there'll be more opportunity for that remortgage. Because one of the reasons that the PTs really took off is affordability. The rates jumped up. people had borrowed the max on the low rates, they couldn't really afford on the new higher rates that they were at the time. Now rates are coming down, there'll be more opportunities for brokers to do remortgages. And that's something that we need to keep talking about and make sure that happens.
Do you know, I posted about this morning going, it's a better year even if it sort of, even if it stays the same, because now we can actually help people again. Like, it's shit not being able to help people, right? When people are calling you, they're distressed and you can't do something for them. But now, the same amount of people this year need it. Was it 1.8 million coming out of fixed rates or whatever it is without any purchase or anything. But the benefit of this year is we can actually help people. That you're right, we're not going to go to that to 1% again, but last year was tougher, wasn't it? Because you actually were struggling to make a difference apart from that PT.
Yeah, this is it. This is where, I think if you've got good fundamentals at the beginning, the one thing that always annoyed me, annoyed is probably the wrong word, but when I started as a BDM, how many brokers didn't do home insurance? Now that sounds, I'm thinking, I thought it was odd. I just thought it was odd. It ties in with the mortgage to me.
Yeah.
And then I got talking to them, and they were saying, it's just not worth it, money-wise, etc. So they said, we send it to somewhere else. I always used to say the same thing. So what if that person starts doing life insurance? What if that person then decides, I'm going to get a mortgage broker? I said, when does that customer then think, I'll go there? So you've got to be careful. So I think one of the things that we've really learnt now is to take every opportunity with every customer. And like I said, this links back into keeping in touch with your customers. There's nothing more important, so that when they do look to make a change, they're there and they think, right, I'll give Brad Rhodes Mortgages a call.
It does make sense.
Brad Rhodes Mortgages.
I always use Dave's Mortgages, and then I've realised if someone's called Dave's Mortgages, I'm like a right idiot, because I've been promoting them for 15 years. But it does make sense, and although everyone hates the phrase one-stop shop, it's just about keeping your customer, right? It's about the retention of that customer, however you can. I don't want my customers talking to, for example, in my business, I want to do everything I can for my customers because I don't want them talking to my competitors, because one day I'll miss an email, or I'll miss a phone call, or something will happen and they'll remember someone else because they helped them out. I just think it's the easiest way to keep your customers, right? Is that they don't need to speak to anyone.
I think brokers are switching on though now.
Yeah.
I think they've been switching on over the last few years, with lenders extending the time to be able to do a remortgage or a PT. 6-month offers now means they're sending the letter out earlier to the customers to say, look, your deal's coming to an end.
Yeah.
The brokers are learning from that and contacting customers even earlier, which again is only a massive positive.
And I think that's the thing about sharpening our tools. That's what's made us quicker, better. The ones that have survived is because, do you know what though? Right, and this is going to sound negative, and I said we'd be positive. I've seen it before in another cycle where we were all like, I will never treat my transaction, I would never be transactional again. I'll never do this again. This is the way we're going to work now because we're sharp as fuck just straight after it's been hard. And then 3 years down the line, you look at them, people aren't selling protection, they're not selling GI, and they go back, I'm too busy, and we get that time issue again. So I hope to God this sharpens us and it stays there, because I think it's great for the industry. If we're all better and we lose the crap, the bottom 15% of the market, then it just continually gets better, doesn't it? But from the past experience, it hasn't always worked like that.
No, there will still be advisors out there who've got a really strong pipeline of mortgage customers who can afford it, who don't do the protection side of things. Simple one: get someone to do your protection. It's not, you know what I mean.
I would have every mortgage brokerage have an internal life insurance consultant, and it's because, and I liken it to being a wedding photographer and you've got to be a funeral director the same day. It's a really shit transition. Do you know what I mean? You're selling someone's most amazing thing ever, and then you're going to say, but when you're dead. So it's a tough transition. But even if you looked at like the model of it, in that if you look at your penetration of what you do as a mortgage broker, and if it's not great, what it costs to bring on a life insurance brokerage, and what their penetration is, I haven't seen a model that means that not selling protection is a good thing. Do you know what I mean? Or not bringing someone in who's a specialist at it if you don't sell it. I mean, there are some fantastic mortgage brokers who are brilliant at both. But I think they're two very different skill sets, protection and mortgage.
It's also not nice when you see what happens when you don't sell protection. I had one many moons ago where the customers, I did talk about it, and with protection with the customers, they didn't take it, and I'll always remember something nasty did happen. I remember seeing the wife in the banking hall, and it really impacted me. And I sat there for ages afterwards thinking, did I do enough? You know,
Yeah.
did I do enough? And I sat there and said, look, I remember the conversation, so they did as well. Well, she did, sorry, should I say. She remembered the conversations, and it was just that decision that they'd made at that point. You know, people think they're invincible. I've always been bad for that, you know, thinking what's going to happen to me. But then obviously recent health issues, you know, changes your mindset. So
I do think some of the best life insurance salespeople I speak to have either been affected by it, or like you've just said, have adversely been affected by not selling it. Because I think we have to be passionate about it. I think you have to let people know that it's so important, and it's only us that can really sell that story. And if you half-ass it, they'll half buy it, right? There's no like it's got to be pushed as much as it can.
You've got to include it in your initial conversations. You know, again, at the end of the day, you cannot force people to take it. We all know what people are like, and especially with rates being where they are now, people are looking at everything, because we've not only just got rates, we've got the cost of living. You know, look at the shopping bills. Everything's expensive at the minute. So I understand that conversation, but you know, when you're spending £70-80 a month on Sky TV or Virgin, so there are others available. When
Or that hooky box that you pay for the year and you get all your channels. I'm not allowed to talk about.
I don't know what it is. But when you've got spending that kind of money, and you can't afford even just a life policy, say at £25-30 to cover just the mortgage, you've really got to have a sit down and you've got to take time.
But that is an education thing, though, isn't it? That's the point. Is that is the chance for a broker to educate you on how important it is. Because I didn't think life insurance was important when I was 25 and I didn't know anything about mortgage brokers and protection and stuff. So it's on us. It's on us as an industry and to educate, as opposed to there's only so much you can teach people outside of it.
Exactly, and it's got to be right at the beginning of the whole conversation, alongside the mortgage. You know, is the protection. You've got to look at it at that point so they can drive it into the budget. Because again, if your customer's saying, I've got £1,000 budget and the mortgage comes to £998, for example, you're going to
£6 life.
Yeah, exactly. You're going to find it a tough sell. But then if you've spoken to them, they said, yeah, well, we can probably afford to put, say, £50. I'm just making numbers up. £50 aside for that a month, £950 for the mortgage. Can we make that work? You tend to find it'll work. You know, it's doing it at the initial stage while it's fresh in the customer's mind. Especially more important for first-time buyers as well. You know, you've got to start there.
I think we do speak to people more, and it is getting better, isn't it? That people are bringing it in early, and it's mentioned 3 times within the process, rather than the old, well done on completing. Now we need to talk about. It's a little bit like, you know, when you did. I know you did this because you're a lot older than me, but when when you did your driving test, and you passed your driving test, and then they said, as they're kicking you out of the car, they're like, by the way, there's another advanced test you can do to save on your insurance. No one's going to take up. Did you do it? I was going to say no.
Bad example.
Driving plus, like motorways and stuff. I didn't give a shit because I just passed my driving test. It's like saying to someone, right, you've got your house, this is your house, and amazing, I feel great. You go, you might die. I forgot to mention that earlier. Do you know what I mean? Did you take it?
I did it because I believed the whole it was going to save me on insurance. And
it doesn't, does it?
I think the first time I did it, because we're talking many years ago, as you've rightly said, I'm an old person now. I think it saved me something like £12 for the whole year.
You're paying 40 quid extra for this advanced thing every week, and you go, saves you 12 quid. I mean, the difference is life insurance genuinely does. It's a massive difference. But you know what I mean? It's that feeling of elation of getting something done, then saying to someone, there's this, you got to add on. Like the driving instructor needs to mention at the beginning, and when we're done, much the same as your mortgage broker, and when we're finished, we have to discuss this because it's the most important part.
Totally agree. You've just got to build it into the whole process, and then the other one is in a year's time. This is going back onto what we started with. Those customers that didn't.
Sorry, just quickly, can you just watch when you bang your hand because I can hear it.
Sorry.
That's all right.
Really passionate.
Yeah, I know. I love life insurance.
Give the customer a call after a year and say, look, you didn't take that opportunity.
Yeah.
Have another conversation. You know, and just obviously annotate in your file to say that you've had these conversations, but keep going. Don't give up just because they said.
That's a good point, you know. Do you know that's a really good point? We don't talk about that. The fact that it's another touch point as well. If they don't take it, you can't persuade them at the beginning. I don't think that is really pushed enough. That they still need it. We still have to keep pushing them, don't we?
100%. You've got to keep talking about it. It's then you have to bear in mind it's on them. If they don't, that 5-minute conversation, you could get like I say, another source of income to come in. You know, the protection. It's not all about the income, but obviously, brokers it does matter. You've just got to keep going to make sure you do what's right for the customer.
Amen. And actually, that right for the customer thing is the be all and end all, right? That's the difference now between a good broker and a shit broker, is the one that cares about the customer. And again, when the money's not easy like it is at the moment, it's really blindingly obvious who's good and who cares.
I've worked obviously with all my regions that I covered as a BDM, and then doing the job I've been doing for the last 7 years. I've met a lot of brokers, so there are some that genuinely really do care. You know, I'm fortunate enough, because of the patches I've covered, I've met some fantastic brokers, and there's a lot of...
You'd like to think you've met some good brokers, because you've literally covered everywhere apart from maybe North Scotland. So
no, well, I do know quite a lot in Scotland. But no, yeah, exactly. But so many good brokers out there who do the right thing, and then they've learned from it, and like you say, they've got businesses where they've took on protection advisors, general insurance advisors, or if they haven't got the time, some of them refer them on as well to companies that specialise in that. I just think we just need to keep going and keep progressing and moving forward.
Love it. And let's move on to you guys at Pepper, because obviously you've given loads of advice, actually really useful advice to brokers. So I'll give you a couple of minutes to talk about what you do for a living. But what's your sweet spot this year, and what do you see happening? What kind of business are you looking for if brokers are listening and thinking, where am I placing this? What's your preferred business?
Yeah. Well, Pep, we're a specialist lender, so you know what we're known for is adverse. There's no two ways about it. You know, whether you've had adverse from 3 or 4 months ago, you know, to 4 years ago, etc. We can look at adverse. Doesn't matter whether it's satisfied or not. We're good with adverse. That's what people know us for. But there's so much more to Pepper. You know, we do 1 year self-employed. We do latest years self-employed. We do different home ownership schemes, such as right to buy. You know, shared ownership's a big part of our proposition, which is obviously going to be important with help to buy finishing.
Yeah.
There's a lot more to what we do at Pepper Money, and the big thing I would like is if more brokers let our regional development managers, the BDMs to everybody else, but let our RDMs come and see them. You know, let them tell them what we...
Why do they think they're not? Do you think that's because you get pigeonholed and people don't know every product, and kind of brokers seem to think they know everyone's matrix, but things change a lot, right?
Yeah, I think there's a few reasons here. So one, if you look at most brokers, they've got the mainstream lenders coming in once a month at least. So let's just say there's 15 or 20 of those.
Why? You know what they sell.
That is where I was going. So that's...
All right, sorry.
It's all right, you jumped there before me, but... Yes, I know that the majority of your business, maybe 90-95% is going to those lenders, right? But when that customer walks in who says to you, "Oh, I've got a default from 4 years ago that for £800 that's not satisfied. I've only got 1 year's books, and I want to go up to age 75. Where can I go?" It'll be none of them. You know what I mean? That's when they need to be looking at lenders like Pepper. Other specialist lenders. So I'm not just talking Pepper.
No, but generally, it's the same thing about doing the right thing for your customer, right? You've got to know the market, not just your five go-tos.
No. And when that customer comes in who's worried about getting that mortgage, they really are thinking, "I don't know if I can do this." And so many people will be telling them in their ears, "You can't get a mortgage because you've got that, you've got this." You can, you know. And it's when brokers know the criteria of these other lenders, we can add benefit to the whole market.
Yeah. And do you think how do you think the adverse market is? Obviously, it's got tougher, but it's going to be more needed as well. How does that sit between rates are higher, but there's more adverse credit out there? How does that sit in the market?
Yeah, it's a real tough one, because the good thing is rates are coming down. You know, this goes back onto where we started again. So the rates are really coming down. You know, our products are quite competitively priced. I always use the word "quite" because we're always going to sit higher than the high street. That's just
I don't know a specialist lender that's cheaper. That's not really specialist.
Yeah.
That's just then you're high street, aren't you?
Exactly. So we'll go up the risk curve into areas that these lenders won't do, and everything's manually underwritten. So we will fully understand. There's no computer says no with Pepper Money, which is really important. So you can get that case in, and we will have a look at it.
Yeah.
This year's going to be another tough one. You know, there's no two ways. The market is, according to the figures, etc., should be down again from last year.
Are you buying into that? Are you buying into that, right? Because I speak to brokers, and I know it's anecdotal research at the moment because it's all what people are feeling. Every time I speak to lenders, they're a lot more dubious of this year than a broker. And do you think that's just because it takes a while for the data to come through, or is it you've got shareholders to kind of, you don't want to over-egg the pudding, or where's the disparity between the brokers saying good year and then they're saying that it looks like it's going to be tougher?
It's a difficult one to answer, that one. The one thing I will say is right now we've got rate wars happening all through all the different types of lenders, you know. So the rates are coming down. Business is starting to pick up. I can see it from the ESIS productions, etc.
So what's my point? How do we have a rate war and a decline in business? Like where's the disparity? Do you know what I mean? It seems strange to me.
The rates might be there, but there might not be people who can take it. So you might have these. Let's take, for example, some of the rates at the minute are late threes, you know, which is fantastic, around the 4% mark. They are coming off of deals that like 1.2, 1.3. That deal might still not be affordable to them. Obviously, then it's look, that's what you've got to choose from. But there's a lot more to it. We need to get the purchase market coming through again. That's the big one. That's one of the things that's really impacted last year and towards the end of 2022. We've got to get that going.
And do you think that'll start kicking on?
I think with the rates coming down, 100%. You know,
we're speaking to a lot of new build brokerages and that first time buy market, and they are saying, you know, Q1's still going to be relatively tough while we all work out what's going on. But from Q2 onwards, we've got a lot of new build ones, which obviously first time buyers are massively impacted by that market. They're flying up, and the position isn't now on the builders that have had it very cushy for a long time. I think they've got to start doing deals and that kind of thing. So I think that's going to be beneficial for us, right? That we can that market first time buy a new build kicks on the rest of the market. That's what we lean on. So hopefully that's right.
We need more. Like you say, we need the houses building quicker. We need incentives coming back. You know, alongside the rates, because you know they offer all sorts of incentives, free legals, you know, stamps to pay for, etc.
Well, there'll be some bullshit incentives coming up soon, won't there? Because there's a general election coming, so whether that sticks, but it's good for the market.
That's the one that I think will really help the market. Let's see what they do. Let's see what happens later on in the year. I think it'll be towards the end of the year. But if they come out with something that can really help the housing market, the mortgage market, I think that can change the figures massively. I'd be really interested to see how the PT market goes this year. You know, with the rates coming back down, will PTs continue to increase? Because they predicted that this year's PTs will go up again, and the remortgages will come down.
I suppose you can see, like you said, like a lot of these 1.8 million people that are leaving, they haven't got their mortgages last year when the mortgages were high. They got them 2, 3, up to, 5 years ago. So I do see there'll be even a similar amount of PTs, but it seems strange that there'll be more.
Exactly. There's a lot of deals finishing this year, so it will be interesting to see whether those customers can remortgage away. And I think the key point here that we've not mentioned yet is how competitive the PT rates are. You know, some of the big lenders, the top 10, I know came out with PT rates where it was very difficult to move them away anyway.
To move that,
rates that were in the market. So if they're trying to retain that business, it's going to be tough to take it away. Because rates are rates, you know. The only reason then you'd have a reason to go away from a lender is if you're doing a capital raising for some reason, whether it's DECON, etc., home improvements and so on and so forth. So that's going to be a key point as well, is what rates on product transfers the big lenders do.
Amazing. Good. But on the whole, I just try to make these lender ones about half an hour long, so I've kept you longer than I would, as I say to everyone. But no, I appreciate it. It's genuine, and it is all useful stuff for brokers as well. And it's always interesting to hear also different levels of every lender is really interesting, because you're on the ground, right? You're speaking to brokers every day. So it's great speaking to a CEO, but they're having to please shareholders. Your job is to keep the brokers happy, right? So it's great to get the different connections. But if people want to get hold of you, Brad, how do they do it? What's the best way to speak to you or any of your kind of BDMs?
You can find me on LinkedIn, or you can
always on there. He is.
Yeah, not I won't say always. I've got a job to do, which I do rather well. But email is brad.rhodes, as in the island, @pepper.money. So you feel free to pop me an email, and like you say, if you go onto our website, we've got the sales team on there. Look up your local RDM. I think the big thing I would like you to remember, take from myself today, is get your RDMs from Pepper Money in to see you. There's so much more we can do, and this year's going to be a tough one with customers with CCJs, defaults, missed mortgage payments. We're here to support that market.
Amazing. And it's getting in front of it, right? Even if you don't think you've got those customers at the moment, just be better. It's about being better, which is more product knowledge.
When that customer walks in, you can go, I know where to put this, I've got
it.
Now, it might not end up coming to us, you know, but at least you've got an option for the customer immediately, and then you can go from there.
And also, on a positive, you've got the best coffee cups that I've had. So the Pepper Money, yeah, it's amazing, your takeaway coffee cups. So I stole a couple off you at a road show, and I've still got them knocking around. You got any merch?
I've got knocking around. I should have really had one held up. I've got a notepad there, but the cat attacked it, so it's got holes in the front, so I don't want to show that one. But
good.
We do have the best coffee cups.
Good. All right, excellent. Thank you, mate. I do appreciate your time. Like I said, hopefully everyone listening can take something from this. And thank you, everyone, to listening and watching. I appreciate your time. And all of Brad's socials will be on the marketing when this goes out to everyone. So if you do want to get hold of anyone, Brad, or anyone at Pepper, you certainly can. But I appreciate your time, mate, and I will speak to you soon.
Thanks a lot. Have a good day.
Cheers, Brad. Bye.